People never seem to learn their lessons, and corporations definitely won't either. We made mistakes in the past and surely will again, but we should never make the same mistake twice. Unfortunately, we seem to be following the exact same patterns that led up to 2008, and that won't be possible to avoid because there was never anything done to mitigate any of the dangers. Sadly, regular people will get hurt, and the too big to fail will get their bailouts. You came here for the truth, so let me unveil that for you. Today we're going to talk about the 137 million people that experience financial hardship. We're going to look at several factors. I'm going to go all over the map today, covering so many different things, but it's all the real stuff. We're not going to look at the stock market that has been supported by the stock buybacks, by the central banks, by the financial establishments. We're not going to look at the VIX index that we have confirmed directly from Powell himself that they have a short position on volatility, making sure that it appears to be lower than where it actually should be. We are not going to look at all of those fake things today. We are going to talk about what's real, and I wanted to begin by taking a look at this. The study we're going to look at right now is right here, so I just always want to provide you with the data itself. Let's look into it. What I wanted to share with you is that approximately 137 million, this is a real number here if you can believe it, 137 million adults reported medical financial hardship in the past year. We are seeing, by the way, this is 2019, this report comes as of, and I think that that's important to understand that individuals today experience financial hardship on a daily basis. They might be able to get over the hump, they might have to borrow some money, they figure out a way, and now they're back into it again. This is being financed by debt. Most people think it's okay, look, don't worry about it, you get some debt, it's not a big deal because the interest rates are really low. That's not the case for so many people. They are dealing with this problem. Many times it's because of what's happening with their medical bills. I've covered this before, but of course this just continues to get worse. It's not getting better, it's getting worse. I could point to the unemployment rate of 3.6%, I believe was the last number. It doesn't even matter anymore. By the time that this bull market is done with, this fake bull market is done with, we're going to see the unemployment rate probably at -2. Like, who knows where it's going to end up? It's so fake and fraudulent at this point that it's not even a joke that we're being told. It's actually upsetting to see this kind of information, but hey, those who want to pay attention to it, by all means, please do. I always have a good laugh when the numbers come out. This right here is a telltale sign that the economy is weak. You know that because people are pushed to the absolute edge, and as soon as something pops up on them, maybe they lose their job, maybe they experience some sort of, unfortunate event that requires many thousands of dollars to pay off, this happens to them, and then suddenly they're part of a whole different group of people that seems to be growing as the years go on. Well, let's look at this other issue right now. So this report right here is just showing us the survey that was done. Nearly 86,000 students participated, and you have to understand what we are looking at. 45% of the respondents were food insecure in the prior month. 45%, almost half of them could not afford to eat, and they barely made it through. 56% of respondents were housing insecure in the previous year, and 17% were homeless in the previous year. Now you might say, well, the numbers are skewed, well, the way that they do the survey is wrong, well, the way that they manipulate this and that. Let's even put these numbers in half, okay? Put that number in half. It's still so serious. This is not going to tell you, obviously, the whole picture of the entire United States. Absolutely not, nor should it. It's just giving us a sample of what is being experienced by a lot of people that is not covered in the mainstream news. This type of information, this one that I'm showing you as well as the previous, think about it. Do you ever see this kind of data being pulled out when the jobs numbers come rolling in and it's 200, 300,000? They say, look how fantastic everything is doing. No, this is the type of data that you don't see. And that's why I bring it up. Look, I could just read you the news and show you, okay, this is how many jobs numbers, the new jobs, the unemployment rate. I could show you this and that. But what's the point? You already see that. You've probably already seen it even before I do my video. Why am I covering that? It doesn't make sense. That's why when I see the negative comments coming towards me, it doesn't make any sense why somebody would have that in their head. Why are you showing this type of data? Why aren't you showing that? You've already seen it. Why would I show that? Well, of course, people don't want to know the truth. They're scared. They're in fear. I mean, I can't believe it. We have adults, I'm assuming they're adults, and they're actually afraid of numbers and charts. Whenever I draw a line going down, if I show a chart, I've done this experiment many times before, okay? The exact same title, practically, the exact same image, except the chart shows a down arrow in the actual thumbnail picture that I use, and I will receive triple, I'm talking triple the amount of negative comments. You explain that to me, how that works. People are so triggered by information that's not even apparent to them, and if they would just look into the truth, my goodness, they would know what's really going on. Trade issues and sagging prices push U.S. family farmers to leave the field. You know, there's a lot into this. I'm not going to get into all of it. Basically, just want to tell you how things externally or political issues could affect people in ways they do not understand. This might be profitable for some people, and then suddenly there's an issue, trade issues in this case, and then the person's hurting big time. Their family has to move, they have to change their jobs. Things could happen. It could be, let's say, the technology industry, they decide to regulate severely, okay? All of a sudden, people who work that in those fields that might now, you know, they don't need as many people, or maybe that this is going to be that the profits are not really there in certain parts of those companies. They have to start axing people. And you could say, well, this is one of the biggest companies in the world. How could they be firing people? Well, we're seeing it. We even saw Apple getting rid of a whole bunch of people quietly. That was not brought up in the news, but you may have heard of it. Apple got rid of a whole bunch of people in the recent past. This is probably going back maybe about a year now, a little less than that. They didn't talk about that. Well, you can look for yourself, but the company is obviously still growing. That's obvious. But we're looking into the data that is simply being avoided by the mainstream media. Now, my friend Warren Buffett, we're good buddies, of course. If a bank needs a government bailout, the CEO and spouse should lose net worth. Sounds fantastic, right? I mean, he eats ice cream, he drinks Coca-Cola. You know exactly that this is a individual who always tells the truth, right? I mean, there's nothing going on here. He's a nice, friendly, older gentleman. Right. Well, not exactly. Look, Warren Buffett, he's a smart guy. There's no doubt about that. He's extremely well-read. And for some reason, Charlie Munger never gets any of the credit for what happens at Berkshire Hathaway. But regardless, that's besides the point. Anyway, looking at this, it's funny because Warren Buffett indirectly gets the bailouts. That's what I think is funny when you look at Wells Fargo and so on. You know, he might point to issues that happen. He might say, tax me more. You know, my secretary gets more tax and this and that. And he can appear that he's so fantastic. But the truth is that the way that the laws are written, they favor the elite of the elite. Not the millionaires, but the billionaires. These are the people that have every possible loophole that you and I can never, ever get, okay? It's not about, you know, being rich, as they say, rich person. They make $250,000 a year. We're talking about people who are in the pocketbooks of the politicians and so on. Constantly, we see the same mistakes being made. I mean, come on, we shouldn't be doing this. We're right in, I'm not even calling this the next thing, the next crisis that happens. I'm not going to give it a new name. This is the financial crisis part 2. It's the same crisis, except we had stage 1, we had stage 2. It's going on today, and it is unfolding in a very, very strange way. There are many, many different spokes on this wheel, but we want to look at it very carefully. If you have the, let's say, the desire to do so, you can. And I know that if you're a regular subscriber on here, you have been looking into all of this. And I know that we are seeing the dangers that are present. Hedge funds and other investors are reviving a type of securitized, I love that word, product that blew up during the financial crisis. This time around, they're convinced that the structures will not only weather the next downturn, but might even profit from it. That's right, they're going to weather the storm. How does that sound? We take the exact same thing, right? Exact same thing. Derivative, garbage, CDOs, that's what we're talking about here. This time around, though, it's not going to be a problem. You believe them, right? Of course, of course. They wear the suits and ties. They look professional. They come on television. They are given their slot to tell you everything is just fine. Shut up. Money managers are resurrecting collateralized debt obligations that bundle risky bonds and loans into new, higher-rated securities. That's... Just think about what I read to you. They're going to take all of these risky things and then they put it inside of a bundle. So think about this. You got your credit card debt. You got your car loans. You got your personal loans. You got any type of debt, basically. Okay, student loans, everything. I've seen everything going into these. And then they take all of that and they package it up inside of this beautiful present here. Okay, this is how I did. I drew the same thing in my book, my first book. And they put it into a present. They put a bow on top of it because you need to make it look pretty. And then they sell that to an investor. And they make sure that the ratings on it are anywhere up to AAA, the highest rated investment possible. So explain that to me. All of this stuff, if you were like a teacher in school, you would give this stuff an F, maybe this one's a D, maybe a D minus, okay? Somehow it makes it through the financial system, all the rating agencies, all of this mishmashing and garbage that they do to it, and it comes out at AAA. Sorry about that. I don't believe it. But if you ask those in the financial industry, they love it. If you talk about the dangers and risks that are present, I had one commenter say, there is absolutely no risk in the markets today. That is a quote. I saved that one because it's so stupid, and I'm going to bring it up at a later date. I'll show you it myself. Anyway, I'm going off on a tangent. Regardless, we're seeing the CDOs today that are really expanding. The dangers are there. And many people think, well, I'm not invested in CDOs, so I don't have to worry about it. You actually do have to worry about it. If you only understood what is underlying this system, all of these companies are investing in it, and they will unfortunately have to take the losses. That means they're going to receive the bailouts if you're lucky, or they're going to do the bail-ins. This is going to be a big, big issue to deal with at some point down the road. Of course, there is always a search for yield, as you can see, making tweaks to the collateralized loan obligations. I talked about the CLOs before, such as boosting their capacity to hold not higher rated debt, but lower rated debt. This is going to make them a lot of profit. However, we're going to see the same stupid things we saw in 2007 that led up to 2008 and beyond. My goodness, this is what they do. All of the biggest companies here are getting into this. Even Blackstone Group they're mentioning in here, and there's others that get into this. Maybe it's not the most prominent investment that they get into, but it doesn't matter because you know at some point they're going to fail. Whether it's 5 years from now, 10 years from now, 50 years from now, it doesn't matter. You know that some way, shape, or form the financial system is all interconnected and people are going to lose out as a result. Here's the chart that corresponds with that. And as you can see, the CDOs, by the way, we'll talk more about this in a second. So CDOs, they're less interest overall as the years have been going on, except 2018, there was a rise that was experienced. However, if you look at the CLOs, collateralized loan obligations, actually this has been growing and growing and growing. So while CDOs in general had been declining, they just filled in the gaps with CLOs. It's not as if they're not going to invest in it. That's what people, if they don't pay attention, this is the kind of thing that they see. Boomerang buyers, more people who lost homes during the housing crisis are buying again. And now I have nothing against that at all. If somebody wants to buy a home, if they can afford the home, you should do that. You should go ahead, you should pay down your mortgage, you should do what you gotta do and live your life. That's what it's all about, okay? However, if you couldn't afford it the first time around, I hope that the same people who had the ninja loans and the things of zero money down and the interest only. Please don't get into that kind of thing. It is so dangerous. It's so risky. And the lenders are going to have a big problem too, because people are going to default. That's what's going to happen. This is the entire reason we have a problem today. This is the global money supply proxy, as they say, basically the central banks and their entire balance sheets. You can see in the previous instances here, actually throughout 2018, this started to head down, but don't worry about it because they ended up hitting the printing presses again and it rose higher. This also was experienced briefly throughout 2014-2015 timeframe. We know that the markets were looking weak throughout 2015 in general. It was actually being considered, this is it. Well, we were seeing the slowdown all around the world. We saw it in Europe, in China, actually especially in China, as well as basically on the global scale. But this didn't happen because they reflated that bubble. They used the central banks, all of them, from the Bank of England to the BOJ, everybody simply put their foot on the printing presses. You had the Federal Reserve that was keeping their, after increasing significantly, they basically kept it at one level, about 4.5 trillion, and then the interest rates started to notch up at the slowest level they have ever done in history. And then you know what the whole story is, but basically this is what has led to all of that chaos that we have seen ever since. I mean, it's unbelievable to see what central banks are capable of doing in this period of time from 2008 up until the present. And unfortunately, we are simply being led into the exact same problems. Of course, the trigger events, the Lehman Brothers, the Bear Stearns, that might not happen. Okay, we don't know exactly what's going to occur, what's going to trigger, what's going to fall, what's going to rise. We don't exactly know, but I know specifically that they're making the same mistakes over and over again. Way too much risk, way too much debt, and guess what? They're going to put more debt on top of it. They're going to do bailouts, they're going to do bail-ins, they're going to do every method possible to ensure that the public gets their liberties taken away, gets their financial, their all their savings, everything that was there for them, that they dangle the carrot in front of them, say, just keep working, don't get upset, don't riot, don't protest, we got something for you, it's a pension fund, it's MMT, whatever it is. They dangle that in front of them, hoping that they just stay docile and silent, and unfortunately it tends to work over time. If you found this video informative, then I would appreciate it if you give me a thumbs up. If you give me a like on this video, you're supporting me, you're supporting this channel, so I do appreciate that very much. You are going to see all kinds of new information, new data that you don't really see anywhere else. I see a lot of hearsay. I see a lot of information out there that is just way out in left field. I don't know where some of these individuals went off over the last few years. It is just wacky what I've seen coming out of there. I just like the data. I like the information. As you noticed in the first place, I'm showing you right from the medical journal, I believe it was. I'm showing you the surveys. I'm showing you the stats. That's what I give you. Maybe it's not fun. Maybe it's not exciting, but that's what I do. If you support me, you can give me a thumbs up. You don't have to pay a dime. Just give me a thumbs up. Put a comment on here and all my videos, and I'm really thankful for that. Okay, if you want the financial education that wasn't taught to you in the school system, I've got all kinds of details in these two books. You can check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Don't go anywhere. I have so much more to cover. If you click on this video, you're going to see all of the data. Check it out. I'll see you there.